All right, is that better? Test, test, test. I can't tell if I am good to go or not. I think I am. You guys hear me all right? Let's see. Let me double check here again. Let's see. Okay, cool. Um, all right. Okay. All right. Good to go. Thank you. I appreciate it. I was saying I didn't realize I was not connected. I've never used the YouTube room here, so this is the first time on that. So far so good. We're having a little trouble, I guess you guys know, with the site, so this is a good backup for us. And as I was saying, happy Monday. Glad everybody's here. Hope everyone had a fantastic weekend and is ready to go for this week. We have got there's not that much going on early in the week. We've got tomorrow, we got housing starts, building permits. That'll actually, that might move us a little bit. But of course, the biggie is on Wednesday with the Fed. And we have been, waiting and waiting to see what's going to happen with the Fed. Although we kind of know what is going to happen there. Hold on just a second, guys. I forgot to do this while we are getting going here. Let me get my end set up. Um, all right, there we go. Okay, so this week is going to be, last week we had CPI, we had PPI. Those numbers both came in a little hot, and then that's actually a continuation from the prior CPI and prior PPI, which came in a little hot. And I really thought we would get some downside pressure on the S&P last week. Here's a 10-day chart. And as you can see, we actually did not. This is Wednesday. We had CPI, PPI, and off the low there. I mean, we just straight up, which I'm scratching my head going, that's not what you would think would happen. You come in with a hot CPI, hot PPI, but it was shrugged off that it was only due to higher energy prices and that type thing. And the more that we all trade, and the more that you see the explanation for what the market does, sometimes it makes you scratch your head and go, I don't know about that. Um, so there is a lot to do with algorithms and all that kind of stuff, and who's got the biggest book and is pushing or pulling on the market. That has a lot to do with it. But in any case, if we look here, this is of course I'm on the ES. This is a 20-day chart. I mean, we're basically just up, up, up with these. This is the way we've been, of course, for a while. Straight up, straight down, straight up, chop, 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 straight down. This gap right there is a rollover gap. Um, when the futures contract switched. But then again, this is Wednesday, straight up, and then Friday. And I actually had a short or a little hedge on down here, and I was not expecting this at all. I thought we'd pull back here and kind of keep going, and we really flushed on Friday. And so far we're just kind of chopping today. What are we up? 9, 10 points on the ES. So let me switch this over here, and we'll talk about the ES for a minute, and then we'll get to just look at some individual names here. Let me see real quick. Okay, so this is the ES. Now this is a 1-year chart. Again, as you can see here, 1 year ES 3502. You guys remember that? Long, long, long time ago, right? But we've basically been up, all year. And again, it looks, hindsight's always 2020. It looks like, oh, that's a piece of cake. You just buy the dip. But it's not so easy. This chart is much, much different than, some of if you break this down, let's kind of zoom in here. What you'll see is that, straight up, flush down, straight up, big flush down, straight up, flush down, straight up, chop, 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 straight up, flush back down, straight up, flush back down. It's been brutal to try to get on the right side of this, and a lot of that stuff is even intraday. So that makes it tough. If we go back here to a, let's just look at, I don't know. So this was COVID. You guys all remember that, right? And the end of the world, sell, 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 and then look at that, 2174 to 4800, right? Um, if we kind of zoom in here, now this is a different pattern, totally different pattern. This is by the dip, 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 for months after month after month after month after month. You just bought the dip. And again, that's very different to the market we're in right now, where you buy the dip and yay, it's great. And then you get flushed down here and you come back up here and you come back down here and you buy the dip and you get flushed down. I mean, it's a totally different market. So, um, if, and again, this is last year too, been kind of frustrating. We're still making money, and you can still obviously trade this market. You have to be a much faster, I think, on the trigger to buy or sell, or buy and sell, probably. Um, so, um, again, it makes it tough. I know people, if you're newer to trading, it's just this is a tough market. It will get better, of course. It will get kind of back to normal. And let me show you what a normal market looks like. You know, I know this. Let's do a 10-year. So 10 years. Yes. Normal, 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 COVID. This was this was abnormal, but this was actually really easy to trade. This was my best year as far as bias goes, in the last 10 years. I've been running a bias account for 10 years now. Never had a down year, and this was our best year. We sold it on the way down, we bought it on the way up. It was magic, right? This is the Charlie Brown pattern, where it's just, it's like that. There's no rhyme or reason anywhere. And when you don't have a trend or a pattern, makes it really, really tough. So the good news is that we are um, we are coming near the end of the rate hike cycle, and so here's our kind of bell curve. Rates are going up, inflation's going up, sorry, inflation's going up, rates, rate hike, rate hike, rate hike kind of thing. And we've gotten to where we're kind of over in this area with inflation starting to kind of come back down a little bit. That last CPI and PPI were kind of a little bit hotter, but we're very much near the end of the cycle versus the beginning. So that's what the market is forward looking into the future, 6, 9, 12 months out, going, okay, we're almost there. We can see the light at the end of the tunnel and all that kind of stuff. And then we do this again, and hopefully we get into a market like this. Again, these are years. That's 1 year, 2 year, 3 year, 4 year, 5 year, 6 years. Um, and that's kind of a lather, rinse, repeat kind of market. If you notice, that blue line there is a 20-day moving average. And for the longest time, if you can look down in here and see, you buy the dip down to a 20-day, that yellow line is a 50-day. And I mean, that's just, you just buy it, right? Now yes, this was during QE. Maybe it's different, of course, that kind of thing. But we will get to a point where, again, we're past the interest rate cycle, hiking cycle. The market's already talking about rate cuts on the other side, and I think that's a little premature. But um, again, I think if we look at this, um, and we probably could even draw a line like this and go, okay, um, we get maybe we can come back up here. I don't know, and we come back down here. Maybe we go lower, but at some point we start kind of resuming this again. Not quite there yet, but anyway, I think we're much closer. So just want to talk about the market, the overall market, kind of where we are. That's again, that's the ES. If we look at the NDX, same thing. I mean, I'll put this back over on uh, grab candles, and we are. So this is the Nasdaq, and as you can see, of course, straight up, straight up, straight up, vols down, 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 down. We're kind of getting at the in the basement here on the volatility. This is implied volatility right there at about 18. That's not even, historically, that's even still a little high, but it's where we've been here trailing year. It's much, much, much lower, right? So at the point where we're sitting right now, this is a 34 EMA right there. Those green lines, green and red lines, the upper and lower 34 EMA. So we either break out here or maybe break down. And if we think about it, the break down and fall scenario is much, much, much less of probability. I mean, I'm a math guy, so I mean, I would think we're in the, I don't know, 10% range, 20% range. And I'm talking about something, something like that. Some really big rollover black swan kind of stuff. That would be probably from something that we can't even see, don't even know is coming kind of thing. That would not be from, oh, the Fed hiked, yeah, the Fed, if the Fed comes in and hikes, yeah, we come back down here. Very reasonable. And then we kind of continue back up that way, right? Um, but let me show you this. If you guys have not seen this, you probably have, and I don't know who all is in here right now, but so this is a Fed Watch tool from CME Group. Check it out now. If you haven't seen this the last couple days, that's 99.0% chance of no hike, right? I mean that it's 99% chance not going to happen. So do we want to bet on the downside? Yeah, probably not. Um, this again, it was 97 last week. I'm kind of shocked that it's up to 99. So right here, if you see this current level, 99% chance, and then a 1% chance of a rate hike. So again, if you're a math person, you don't want to take you don't want to take that other side of that trade. It's just probably not going to happen. Now, what could happen is, that is the hike itself. Now we got commentary with Powell you know, afterwards. Um, he is not great at always saying the right thing, and he always kind of says the wrong thing actually. Might he come in and say, we're not gonna, we've decided not to hike rates, but we're gonna be vigilant and we're gonna continue to hike as long as we have to, and the first sign of trouble we're gonna hike again, boom, that, yeah, spook the market, and then we're going down again, right? Again, that's probably a low probability. But if we did, again, I'm thinking, we come down here to this prior level here. I just don't see us doing one of these kind of things. Again, without something really major happening. So, we all know that. And if you're in the main room with us most of the time, and again, I don't know who all's in here. I can't see the chat, and I can't see any comments, unfortunately. But we talked about this. The way that I've been playing, I think it makes sense. Is kind of, we got to hedge on both sides here. We're right at the mean. So higher probability we go up, but I've been trailing up little hedging, on the way up here, and it's worked. And now I've got some hedging on the upside and some hedging on the downside. And you can do that in small size, and and we'll actually look at that in just a minute. But so I'll hedge with the SPY, for the SPX. I'll hedge with the Qs for the NDX, or the IWM for the RUT, or even the diamonds. So again, we'll take a look at that here in just a second. Let's see. Um, all right. Sorry, I'm trying to catch up with you guys. All right, let me show you this real quick, and then we'll jump over to. I want to do a ribbon here, and then we'll jump over and start looking at some ideas. So these are ATRs, and as you can see, average true range, we're right back to zero. That's +1, +2, +3, -1, -2, -3. We're right in the dead center. And what happens when you're in the center? You typically go up, or we'd have to go back a little bit, or we may come down, again. That's kind of our range. So you would look at that and go, maybe we should just do some iron condors. And that has been working, actually. We'll set some up in a minute. One downside of doing that is that the vols have come way, way down. We're back into the 13s on the VIX. So, which is still historically, that's still a little elevated, but we were at 18, 19 in the 20s, 18, 19, 20, 21, 22, 3, not that long ago. And it's come down pretty fast. So we'll look at that here in just a second. But I want to show you one other thing. So that's the ES. The NASDAQ is going to look the same. Right back at the zero line, that white line there is the mean, right? The one that is kind of the outlier is the RUT. So the RUT has been, we're at -1 ATR right here, and looking weak. This thing has fallen harder, faster than the others. And let me flip this back to grab candles and waves. These are Darvas boxes. I mean, I always look at a chart. There's a couple of ways you can look at a chart. If you look at a chart and you don't, imagine you don't know the name, you don't know what the vehicle is that we're looking at. If you looked at that, you would say, oh, I'd short it, as it comes back up into this, kind of like this, you just keep shorting it down, shorting it down, shorting it down. That's what it looks like to me. It does not look like it wants to do much. If we do break above that, that green line's a 34 EMA. If we do break above that, and especially if we break above that Darvas box, that signals that you're kind of good to go on the upside right there. But so far that's not firing long, it's firing short. So again, that's kind of the outlier. And if you've been trading for a while, you probably remember when they actually, the ES, the NASDAQ, the RUT used to all at least somewhat trend together, and they haven't in a little while. But that does give us a little more flexibility on trading. I like trading the RUT, actually. But again, here I'm, the bottom line, I think if I had to pick, I would be bullish, or I would be on the upside on the ES. I'd be on the downside on the RUT, and I would probably be on the upside or neutral on the NASDAQ. Now the NASDAQ, of course, we've got to consider, the Magnificent Seven, Apple, Amazon, all that kind of stuff, Tesla, so forth, and Microsoft and AMD and all those, and most of those don't look so good, right? If you haven't seen this, I mean, take a look at Apple. Again, if you didn't know what this was, if you just covered that name up and looked, that's pretty ugly. And you would short from there back down, Even here, we broke above. Yeah, it's gonna rip, and it didn't. We look at Nvidia. I mean, look at that. And I've been an Nvidia bull for a long time. Um, I tried the last time I tried to buy this dip. Normally you come back down, you see the green, the 34 EMA, you come down, buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. It doesn't even get, I mean, we didn't even come down to it, and we're still getting bounces off here, right? Here I'm thinking, okay, well, we'll come down, we hit 34. This is a long, long, long track record of going, up, 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 up. So I bought the dip hit right here, and we got flushed down, and I actually was able to maneuver that trade around and came back out all right on it. Um, and I've been trying to buy the dip here. I haven't yet. And I told you guys, if you're in the main room, I guess it was last week, I was like, I so want to buy this, but I'm not going to yet, for two reasons. The chart looks like it's breaking down. You got to consider the NASDAQ as well. NVIDIA trades on NASDAQ, of course. Then, anytime we have a big, uh, unexpected, or not a big, unexpected, a big event such as Fed meeting, this is not FOMC, this is a Fed meeting with commentary and all that stuff, right? Um, I'd rather not step into anything, ahead of that I'm really not sure of. And of course, I'm glad I didn't, because we've come back down. Now, I will, if we come back down to this lower Darvas box, yes, I will be stepping in there and looking to get long there. Um, Let me show you my chart. I use different kind of, I use this is the Darvas box, um, wave and grab candles that Rogge put together. This is really cool. I like it because it's a 34 EMA, and that fits my time frames much better. But I also use a system called Dynamic Trader, for Fibonacci levels. And you guys probably know my wife is, Tammy, the Fibonacci princess, and she runs, all my charts for me. But this is what I've got on NVIDIA. Now, this is a daily chart. As you can see, we're coming down into support right here. That's that lower low right there. Are we going to get down there or not? I don't know. We are quite likely to bounce right here, uh, 416, 419 kind of area. Let's see real quick. Um, Give me a second here. Okay. Give me this. So let me zoom in here a little bit. So that puts us, about right there. It's kind of about where you know, there to there. It was 419, 416 is that area. I'll show it to you again. Let me zoom that back out a little bit. And again, we're almost there. Right there. So does this level hold? Maybe we can we'll look real quick and see if we can find something there that makes sense. I mean, I'm totally fine doing it. I didn't realize we were down to that level yet. I'm totally fine doing that if we can find something that makes sense. So let's jump in here and see what we can find on that. And then I'm going to show you some things on SPY here in just a second. So on NVIDIA, NVIDIA reports, not till the end of November, so we got a long time there. Um, We don't get we have not gotten on NVIDIA, we have not gotten the real clean cut EKG volatility that you get on there's earnings. I'll show you here in a second. I mean, most are like this: straight up in earnings, vol crush. Straight up in earnings, vol crush. Straight up in vol crush. This is kind of a ho hum pattern. Let's see. I want to just point one out. Let's Amazon. There you go. A little bit better. Some of these are. I mean, this is what I'm talking about, the EKG pattern. You spike up into earnings and vol crush. Spike up into earnings, vol crush. Spike up into earnings, vol crush. Spike up into earnings, vol crush. So if you look back on this, and this is one way we set up our trades, and one way we definitely analyze things to help us be able to pick a strategy, right? So right now, and then I'm just as an example on Amazon, here's earnings. Where do we think volatility is going to go? Well, it's probably going to go back up, here, here, here. So volatility is going to go up as we get into that earnings, right? So that can help us try to figure out what we want to do. So basically, you don't want to start selling a bunch of premium right here and have vol rising. It's not going to help you. Back over here to Nvidia. Let's look and see if we can do something. Let's go out. Let's just go to October here. We can see volume much better on the monthly expirations versus the weeklies, and we've got a $42 expected move, which gets us up on the upside to 80 ish. That's about a 25 delta. I'd probably actually go to a 20 delta. There's a lot of volume up there at 500 on the round strikes. Let's just, to do a little quick math, let's just look and see if we put a butterfly up there, if it might make sense. And again, I'm not sure who all is in here, if you're familiar with the Analyze tab or not, but this is very helpful. All right, so if we look, so we've got to set this out to 20 October. And that gets us up inside the body of our butterfly. The center of our butterfly is actually a little past the expected move, but that's actually better. That's really good in your favor. That's what you want, right? I like that. That looks pretty good. Let's see if we can tweak this a little bit and see if we can make it better. One thing we could do to make it less expensive, let's move this 475 up to say 480. So there we cut our cost down about in half. That looks pretty good. Let's see. So, I mean, basically, so it's $2,500. Check this out. This is good to know. Just interesting, right? If you're going to set a trade up here, you do a regular butterfly. This one, regular 25 point wide, you got $2,400 at risk. By moving that lower strike five points. And what that does is takes this in just a little bit to there, slightly, 480, right? So we go from $2,400 to 1,200. We cut it in half, cut the cost in half by moving one strike 5 points. That's pretty cool. I just saved a lot of money right there. Now, there are pros and cons of doing that. The main one is that this one, two things. You aren't likely to have to worry about overshooting it, because this, again, and I don't know who else in here. The pink line, lavender line is our T+1 line. Now this, over the life of the trade, will go up. So make money, make money, make money, make money. And butterfly, even if you get on the other side of the butterfly coming out the other end, you're still going to be making money. Of course, we would sell it in this lower, or this on the opposite side. Once we get past the short strike and start coming down the slope, we would need to come out of it, right? So a lot more cost here. Don't really have to worry about overshooting it with a regular butterfly. Again, pros and cons. Excuse me. This is a tiny broken wing butterfly, and here we cut our costs in half. We still don't have to worry as much or too much about overshooting up here, but you don't really get that nice curve. This line is straighter, and it starts to kind of slowly go up, very slowly, very slowly, very slowly, until we get closer to the expiration. Again, pros and cons. This is, you cut half the cost out of there. Now the max profit, if you're sitting at 500 at expiration, this is worth $18,000 on 1200. That's pretty good. Here it's worth 22,000 on 24. Pretty good, right? You get more bang for your buck out of this other one, bottom line, no doubt about that. That is 32 days out. And again, this is October 20th. NVIDIA reports, end of November. And you see that high, NVIDIA high, 502. That is 502 right there. So that's pretty good. And remember, we've got a, what was it, 42 point expected move. So 440, 42 gets you to 482 right there. And that's just inside the body of the butterfly, right? So ideally, you need a little bit of tailwind here to get you on over solidly into, into that part of the trade. Let me look at one other thing. Let's see. Let me just try this. Let's move this thing down. I just want to see. Let's move it down 10 points. Let's go 65, 90, 15. So what I was trying to do there, think about this. There's really where we're going on the trade. So that's $10,000 profit on about, if you did 10 lot, that's $3,000. That's still pretty good, right? We are more likely to pin at 500 if we're anywhere close. That big round number is a magnet. That's the previous high, all that kind of stuff. Are we in very scary territory of overshooting it? Not really. But you only got 10 points of wiggle room there. So that's, if I was going to do that, again, trying to kind of center around 480, 482, 3, 4, 5. I would prefer not to do a broken wing here. Because if we did, and we did it the same way, I'll show you real quick as an example. If we broke this wing and went 465 to 470, pretty cheap. 1,400 bucks. Again, this looks pretty good, but you do have a bigger chance of overshooting this thing on the upper end. And you can see it. You can see that. You see that purple line, the T+1 line, it's drooping down out here. And if you see this one, it's not only is it equal, but you got this pretty subtle rise in that T+1 line like that. Let's see, hold on just a second, guys. So anyway, I hope that makes sense. Let's see. Give me just a second, guys. Okay. All right. Sorry about that. Anyway, so a couple very, subtle differences. It's amazing how a very subtle difference here can make a pretty big impact on a trade like that. So the other thing we would probably consider here is even this, say we did, we did this and it's 1,200 bucks. Actually, let's do this. Let's take that down in half. Let's do 5 contracts. So now I got 600 bucks in this trade, and we say, okay, if Nvidia, you see this lower, this other, so we got 2 Darvis boxes here, lower one there and lower one there. This one is at 373. Let's say 375. So let's go out here. This will be kind of fun. We'll go to that's an 8 delta. Let me go more than that. Let's go to a 10 delta, 380. Let's see how much we can get paid here. That's 46 cents. Okay, so if we did that, now we have covered almost all the cost of it. We could actually cover the whole cost if we did more contracts or came in a little closer. I'm going to move this up 5 more points. Let's go 85, 80. Okay. I do 12 contracts. Okay. So you see over here, $5,900 of risk over here. We would never let it get over here, but over here we got a $48 profit. So basically on this, anywhere from here to here at the end of the trade, you make money if you are between, let's say, 390 and 520. So let's do this. If we go 390 to 520, so that's kind of our range right there. I mean, that's a pretty big sandbox to play around in, right? Nvidia's been super strong for a long time. No reason to think it won't continue to. I don't think it's going to free fall down and crash and burn or anything like that. The math says it probably won't get past that on the upside, so that would be a pretty safe assumption there. And in this, don't pay attention to that margin. That actually is not right. This I got multiple toss accounts going. This has got it's real time data, but this is a paper account, and I do that because I got so many other toss accounts open right now. This takes less memory and all that kind of stuff to run in the room. I'm just doing this for examples and stuff. But anyway, the reason that's off, you might wonder, why is it off so much? Well, this is showing 0 interest rate, and right now the interest rate on toss is 5.25. And it's a glitch, and I haven't talked to Toss about it. It's not really that big a deal. I know what the margin is. It's 5,000 on that, but again, if we said, okay, well, let's make it right. Let's go 5.25. I mean, it kind of screws the trade up. It makes it's not that obvious here on a trade like this, but like on a calendar or a diagonal or something, it'll really whack it. It makes it look, it'll mess the P&L up pretty good bit. But anyway, you get the point here. So again, that light gray area is kind of our target zone. Ideally, if you do a trade like this, you can, we're shooting for a window over here from 480 to 520, so it's 40 points wide. I mean, that's pretty wide there for profit. And again, for loss, I mean, ideally you don't do anything. You just put it on and say, I'm willing to risk 600 bucks, or you know what, I want to risk less than 250. Okay, there you go. There's 240 bucks, and it either works or it doesn't. You get up in this, in the body here. Let's say you get a 490. It's worth $1,800 on $240. That's pretty good. Odds are in favor of it as well. from a bullish chart standpoint. Again, unless the whole market kind of, you know, takes a tailspin. But the other side of this is that if we were to come down, now this has got 33 days on it. If we were to come down and you've got that much time left on it, okay, well, let's come back in here and we'll sell, sell some premium against it. And we could do any number of things we wanted to do. We could sell that. We could move in closer. You could move, if you move in closer, you could get a 1-to-1 ratio, like, um, you know, risk 2.5 to make 2.5, that kind of thing. Um, so you can really dial it into where you want, depending on where you think ultimately your risk is on the downside. So anyway, I hope that makes sense. I'm not going to do that one. That one looks pretty interesting, actually. So of the three, I think, is that 480? I think that makes sense. Let's look at the chart one more time. Let's do a 2-year. I mean, again, look at that low, 108 to 502. Do we think it's going to go like this? Back down to $100? Nah, you might be waiting a long time for that to happen, if ever, right? Um, unless something, unless Nvidia comes out, Nvidia's cooking the books, or something crazy, which I don't see that happening. So yeah, I would be willing to, you know, odds are greatly in your favor for bullish continuation. This gives it plenty of time here. We are also, now remember, I was talking about that volatility, and then we'll move on to something else. I was talking about that volatility. You see this got negative Vega. We know that Nvidia, that's a 2-year chart. We know that volatility is going to come up, right? That is not necessarily good for a negative Vega trade, but it's only less than -5 on the Vega. If we were to do a calendar or something, you'd probably get, you know, I don't know, 300, 500 positive Vega, so that would be beneficial and all that kind of stuff. But it depends on where you put the short and where you put the long. So always be aware of that. If you don't know what I'm talking about on the Greeks, you should try to start learning the basics of these. But anyway, I don't really have a way here to post this. You guys that are in the main room at Simpler, um, we'll look at this. I'll post this if I take this. I probably will take this. I don't know that I'm going to take it today. I don't think, with having 30 something days out, I would want to get it on ahead of the Fed on Wednesday. That's at 2 o'clock on Wednesday Eastern. So, maybe tomorrow, um, even Wednesday morning. But again, if you want to do that, and again, I don't have a way to post it in here, but I'm just centering on this one, which is really kind of my favorite. This one, or we could do a regular fly, move it down. This, I could make a really good case for this, um, in that the T+1 line is better. I am including 500 here. My target's really here, but I'm including this, and we got a little bit of buffer room, and we've got T+1 line out there. So either one of those would be fine. Let's show you the volume real quick here. If we look, I mean, let's see, it was 3,000 there, 6. So by far, this is open interest, right? So that's already outstanding, but there's 3,800 today. Now we don't know if that's bought or sold. It could be something else, but but by far the most volume in open interest is at 500. So I do want to include 500 here, right, in the trade. Let me spread that out a little bit more and see if I can see anything on the other side of this. No, not really. I was looking to see if there was potentially a butterfly over here. Um, and the way, let me go a couple more strikes out. Again, if you guys are in the main room, you've seen us do this before, but sometimes, especially on open interest, you'll see like 10,000 contracts here and 5,000 here and then 5,000 here, and it's a butterfly, right? 5, 10, 5. This I can't make a case for that, but I was just looking to see. Um, and again, down here, so it's 16,000 up here. There's 13,000 down there. Probably a risk reversal, meaning that's probably sold. That's bought and that's probably sold. Perhaps, I'm speculating because I'm in a bullish frame of mind on this stock. But anyway, um, definitely want to keep that on the radar. All right, let's switch gears real quick and go to SPY and just do a little digging here. Again, I like to go out a little further in time. I was looking this morning, if you notice, open interest over here. Now these are, you know, that's a 70 delta. So I wouldn't be expecting too much there, but look over here. You got a 124, 136, 142. I believe that's a spread, the 440, 430. I think it makes sense like this. This is on SPY, 440. And I don't know. Again, we don't know, but we can make some assumptions, right? If I was bearish, would I do that? Yeah, it looks pretty good to me. So let me open that lockup. So say $2. I like round numbers. So you can risk $2,000 there. If you go down here, it's worth 8,000. Where is your max profit? Is right there at 430. So you see that? 430 to 444 is 14 points, right? What's our expected move? Voila. 14 points. Almost 15, 14.91. Does that mean that's what it is? No, it doesn't. But that would make a lot of sense if someone is doing that. You could say, well, how do you know they didn't sell this? Let's flip that around. How do you know you didn't sell that? Well, it really doesn't make a lot of sense to do that. On the put side, you could on the call side, I guess. It just doesn't make sense to do that. So I'm pretty sure that that's what that is. If that's the case, what's more important on a trade like this, on any trade? Where's your break even? It's right there, 438. So your max profit is here, but there's your bogey to get over. You don't lose money at the end of the trade as long as you're past that point, right? Why would you want to do that? Well, again, what if, let's switch this back to SPY. What if we did break and go lower here? What if Powell, comes in and says, we're not done with rate hikes yet, and we've got to wait to see more data, and blah, 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 blah. And we come down here. Very pretty good chance, you know. That number there is 432. That prior low Darvis box is 431. So again, that gets you 430, 431, 432. It still gets you a lot of profit out of that trade. And you can do the same thing on this trade. The cool thing I like about these trades is we do this, and let's say it pops up a little bit on the, on Powell, whatever. We sell the call side and try to cover the cost, of the trade that way. If we want to, you don't have to. But that's always, it's always an option, alternative. Sell that right there, or you can always kind of switch gears, and there's a whole lot of mixing and matching on these trades that I like to do. Um, let's see if we went um, up to 460. Let me try this real quick. Let's go 460 on the upside. That's a 14 delta. And I'm just going to go straight to the expected move there. And let's say we do a 55, 60. I love the SPY because it's got 1 point increments on the strikes. I'm going to move that one up 66. And that doesn't really help a lot. I'm going to move it up 67. That doesn't really help. Nah, I don't want to do that. Actually, let me try this. 70, 50. Ooh, that's way too wide. Trying to get that in for about $1. Yeah. 52, 52 half, 53. There's $1. So, if you're not sure, you could always do something like that. Obviously, let's bring this down to, let's do 5 contracts here. So that's $2, 5 contracts, $1, 10 contracts. But you have a pretty good sea of death here in the middle. Again, we could sell, this is, I'm just kind of, I like to do the build a bear trade. If it goes up, you make money up here. If it goes down, you make money here. It's better to pick a direction. We could come in and sell an iron condor here up under all that combo stuff and kind of pay for both of them. I don't mind doing that at all, but that kind of starts to get a little confusing. You got a lot of strikes going on here. You got to make sure you're not overlapping, on the strikes. And, you got to unwind it at some point, most likely. But I don't mind doing that at all. But it's better just to pick a direction, and I would actually say this, okay, let's say we have got a whole lot of long stuff for the Fed, and we want something on the downside. This is probably the best way to do it. That's SPY. Most liquid vehicle out there is SPY. Get in, get out, and all that kind of stuff. Great hedge if you got a bunch of long stuff. And then you take this and you go, you know what? I'm just not sure. I'm going to move this out another, I don't know, let's go out to November, whatever. And then I've got something. Let me see the next date past. The next date past 20 October is 27 October. So, and then I would go like, I would do a regular fly, probably like that. So now you got something bullish on 1 week later, bearish 1 week before. So October 20th, you got a bearish trade. 27th, you got a bullish trade. One of them's probably going to be right, And if you get if you were to get up here early, you see the curve again. You always pay attention to that curve on that T+1 line. It's going to go up like this. So you'll, even if you get there early, you'll still make money. It won't be this kind of money, but it will be, $1,000, 1,500 bucks, whatever. It'll still be some, some good. It's good when you can have a trade that you're wrong and you still can get paid on it, right? And when I say wrong, I mean if you did that and you said, actually not that one, if you did this one and we got there early, again, small trade, 1,000 bucks, and you get up here and you make 300 bucks or 400 bucks, and you're wrong because you were expecting it to not to get here till the end of October and it gets there in a week. You know what? You still made money, high five and go look for another trade, right? So again, I hope that makes sense. Um, I am almost out of time. I was going to get, there are a couple of earnings trades coming up. We've got FedEx, we've got Costco, Micron Technology, I think Paychex, I believe, is coming up. AutoZone. There's a couple of them, and I looked before I came in here and just trying to find some ideas for us. None of them look Nike. None of them look that interesting, honestly. Um, Costco. I like Costco. I was talking about it in the room last week, and I said, we should probably get long Costco, thinking we get up here this upper Darvis box, and it's up what, $7 today or something. So kind of miss that one. I feel like I'm chasing it here. It's at 562, and it's got 8 points to go to get to my target. So not much to do there. Anyway, um, we will keep looking. Hopefully, our site will be all back up and running, and everything will be great very, very, very soon. Hopefully, today. But I do like the NVIDIA idea. I think I'm going to post that in the room when we get back going. Maybe tomorrow. Again, it looks good. It makes sense. I'll keep looking at it, and I can't poke a hole in it right now at this point. I just don't see any problem with that. If we can risk, whatever we want to risk on it, and or maybe even kind of cover some of the costs by selling some credit around it. That makes sense to me. So anyway, other than that, all I'm doing today is kind of watching here this real quick as I wind it up. Um, don't really see a lot to do here today as far as like an end of the day trade. We're literally up $1.68 on the SPX. Just not much to do here. Um, I mean, I'd probably look at a 44.50 pin if you're going to trade it end of the day on SPX, but yeah, we got an hour left, so that's you're not going to be able to get much pricing edge there. So anyway, that is what I've got. Hope some of that helped. Made got you to think about trades and trade construction, that kind of stuff. And let me know if I can help, and then I will see you guys back in the main trading room when we get this thing up and running, and we'll go from there. So thanks for the time, guys. I appreciate it, and I will talk to you soon. Take care.